The world is changing. Money is changing too. We are witnessing the rise of something new, cryptocurrency. Imagine a digital form of money, secure and independent from governments and banks. This is the promise of cryptocurrency. It started with Bitcoin in 2009, a revolutionary idea born out of the financial crisis. Since then, thousands of cryptocurrencies have emerged, capturing the attention of millions. Cryptocurrency is not just about technology, it is about freedom. People are frustrated with the current financial system. They seek alternatives that offer more control and transparency. This is why cryptocurrency is gaining popularity. It represents a shift in how we think about and interact with money. For decades, we have relied on banks. They hold our money, facilitate transactions, and provide financial services. But trust in these institutions is waning. Banks are often slow, expensive, and opaque in their operations. International transfers can take days and come with hefty fees. Stories of corruption and mismanagement erode public confidence. In many parts of the world, access to banking services is limited. People lack access to basic financial tools. This exclusion further fuels the desire for alternative systems. Cryptocurrency offers a solution, promising a more inclusive and accessible financial future. Cryptocurrency can seem complex. Let's break it down. Bitcoin was the first cryptocurrency. It is a digital currency that operates on a technology called blockchain. Think of blockchain as a public ledger. It records every transaction across a network of computers. This makes it secure and transparent. Ethereum is another popular cryptocurrency. It goes beyond Bitcoin by enabling smart contracts. These are self-executing contracts with the terms written directly into the code. This opens up possibilities for decentralized applications, from lending and borrowing to gaming and supply chain management. Cryptocurrency offers a new way to send and receive money. Transactions happen directly between individuals, without intermediaries like banks. This peer-to-peer system is fast, often settling transactions in minutes. It also bypasses geographical limitations, allowing for seamless global payments. To buy, sell, and trade cryptocurrencies, you need to use a cryptocurrency exchange. These platforms act as marketplaces where you can convert traditional currencies to cryptocurrencies and vice versa. As the cryptocurrency market grows, these exchanges are becoming more user-friendly and accessible. Section 5. DeFi Reclaiming Financial Control. Decentralized finance, or DeFi, is one of the most exciting developments in the cryptocurrency space. DeFi aims to recreate traditional financial services like lending, borrowing, and trading on the blockchain. All this happens without the need for banks or other financial institutions. With DeFi, you are in control of your finances. You can earn interest on your cryptocurrency holdings, take out loans, and trade directly with others, all on a transparent and secure platform. This opens up new opportunities for financial inclusion and empowers individuals to manage their own wealth. Section 6. The allure of stability. Stablecoins as a bridge. One challenge with cryptocurrencies like Bitcoin is their volatility. Their value can fluctuate dramatically. This makes them less suitable for everyday transactions. Stablecoins aim to address this issue. They are cryptocurrencies pegged to the value of stable assets like the US dollar or gold. Stablecoins offer the benefits of cryptocurrency, such as fast and cheap transactions, while minimizing price volatility. This makes them more practical for everyday use, acting as a bridge between the traditional financial system and the world of cryptocurrency. Section 7. Navigating the risks, volatility, scams, and the regulatory maze. While exciting, the world of cryptocurrency is not without risks. Volatility is a major concern. The value of cryptocurrencies can change rapidly, leading to potential losses for investors. It is crucial to understand the risks and invest responsibly. Scams and fraud are also prevalent. As with any new technology, bad actors try to exploit unsuspecting individuals. It is important to research thoroughly and exercise caution when investing or engaging with cryptocurrency projects. The lack of clear regulation in the cryptocurrency space adds another layer of complexity. Governments around the world are still grappling with how to regulate this emerging asset class. Section 8. Coexistence or conquest. Crypto and the future of finance. Will cryptocurrency replace banks entirely? It's a question many are asking. The answer is complex. Cryptocurrency has the potential to disrupt traditional banking, offering faster, cheaper, and more accessible financial services. However, banks have significant infrastructure and established trust. It is more likely that we will see a future of coexistence. Banks are already exploring blockchain technology and integrating cryptocurrencies into their services. This convergence of traditional finance and cryptocurrency will shape the future of how we manage and interact with money. Section 9, a new era of money, embracing innovation and empowerment. The rise of cryptocurrency marks a profound shift in the financial landscape. It empowers individuals, promotes financial inclusion, and drives innovation in how we think about money. While challenges and risks remain, the potential of cryptocurrency to revolutionize finance is undeniable. As we move forward, it is essential to approach cryptocurrency with a balance of enthusiasm and caution. By understanding the technology, embracing innovation, and advocating for responsible regulation, we can unlock the transformative power of cryptocurrency and shape a more equitable and accessible financial future for